Another episode of the Industrial Real Estate Show. Very honored to be joined by Justin Horowitz. So Justin's grandfather started Cooper Horowitz 60 years ago. Am I right on that?
Yeah, 61 this year.
So third generation with the company, debt and equity. Actually, could you describe Cooper Horowitz a little bit more for people who don't know?
Yeah, for sure. So this is and again, thanks for having me on. Very excited about this. So Cooper Horowitz is a debt and equity brokerage shop that my grandfather started in 1964. So we're on the 61st year this year. He's 88, still comes to the office every day when he's in New York, and suit and tie, old school as it gets. So he came from nothing, grew up in the Bronx, and when he was 15 years old, was sorting mail at a brokerage shop called Sonoblik Goldman. So came from nothing at 15. 3 years later, didn't go to college, but he kind of got the itch to do cold calling and brokerage that way. And so, long story short, ended up finding his partner Howard Cooper, who's since passed. Started Cooper Horowitz in '64, and we're still going. So I'm part of the third generation here. We do debt and equity throughout the country. I have been in the business coming up on 13 years now. Worked for a developer out of college called Brickman, did investment sales at Studley after that in New York, and then been here coming up on 8 years. So loving what I'm doing. I see, my father's here as well. I see, my grandfather when he's in. We talk every single day, and when he's not. So it's been a lot of fun.
That's very cool. I think that that's awesome that your grandfather still comes in with a suit and tie. That is old school, where nowadays it seems a lot more casual. But to hear him still going in with suit and tie is awesome. So very cool to hear the family story on that and your background as well. And what we're going to talk about primarily today is iOS, which
Yep.
it has become an area that you're an expert in now. You've done a number of panels on it. You speak about this regularly. It's something that you're not only passionate about, but you're knowledgeable about, which is something that I love. I love industrial real estate, and anytime we can do a deeper dive into one of the sections is always an opportunity I love to take on. And you were highly recommended actually to come on this. So very excited to dive into this.
That's cool.
Let's start. What is iOS? Because 5 years ago, that term didn't even exist, or maybe
Yeah.
it was very niche, and now it's very common. So what is iOS?
Yeah, it's funny because I think I'd like to say I got in early 5 years ago, but there's been folks doing this for a couple of decades. You look at Real Term, who's obviously been doing this for quite some time, and other folks like Altera as well. But when you kind of take a step back, iOS, as we know, is industrial outdoor storage. It's anywhere from, call it 2 to however many acres above that. It could be 2 to 20 to even 50 or more. These are sites that have low lot coverage, so smaller industrial building that could be a service facility. It could be an outhouse. It could be just land with 0% lot coverage as well. And these are sites that are mission critical to the tenants in that desired location. So port city markets are in vogue. You have infill locations, and then the secondary and tertiary markets are becoming popular as folks start to get priced out of those more primary markets. So again, these are sites that are low capex going in. Most of the institutionalization going on today is repaving, lighting, and fencing, and it's really hard to find these sites. So when you have folks that are buying these deals, if the zoning is there and the environmental is there, and we'll get into the environmental at some point this call, if those two things check the box, then you find out where the leasing market is, and then from there, you're sitting on gold. No one's building this in cities anymore. I think there's a lot of YIMBYism, and you're in my backyard, and I don't think multifamily developments want this in their backyard. So if you can find a really nice, well-zoned property, you're sitting on gold.
That's a great explanation, and you're right. I do want to get into the zoning and the environmental aspect of it. What, but let's start with location first, because I think you hit on a really key part there is that it's it's very hard to find it in key markets, but it's also abundant in some of the secondary, tertiary, or even rural markets
Yeah.
where you might just be able to find a 20-acre site where it's perhaps a small town, there's not a lot of regulation, they probably don't really care. They would let someone go and put a whole bunch of trucks or a lay down yard or whatever it is. So when you're looking at a location, are you primarily looking at a large market, coastal market, a large inland market? How do you actually define what a good market is?
Yeah, and so we've done business now in 28 states throughout the country. So we've seen, deals that are in tertiary markets, and then certainly the top 10 port city markets as well. I think it's all about the location, of course. So I think that's real estate 101. It's location, location, location. And so when you have a site that's, let's call it in Newark, New Jersey, it's off the side of the highway. You can get right off of I-95 and take that turn right towards Newark, the port of Newark. I mean, that's gold, of course. But how many folks can actually afford to park their trucks there or have their business there? So then you start seeing it pull back a little bit towards, call it a Piscataway or a Sayreville or even Aberdeen, which are amazing markets. And you can kind of get that tenant that can't afford Newark or be close to the port, but still has their operations close to the Garden State Parkway or to an interstate, close enough that they can get on the road pretty quickly. That's New Jersey, and then of course there's Savannah, there's Baltimore, Wilmington, Port St. Lucie, just on the East Coast, and Laredo's become incredibly hot, and then you have the West Coast as well, and I think San Diego's become a market that a lot of folks haven't been able to tap into yet, but it's become pretty popular. So I think you kind of look at the coasts and the ports, and then you kind of bring it back into the middle America where Kansas City's become pretty popular. We talk about Laredo, and that's become incredibly hot, especially with everything going on with tariffs and cross-border trade. So it's been really fun, and I love getting on planes and going and seeing my clients and touring the assets. And it's hard for me as a broker to be in front of a lender, and if they ask, have I been to the site, and I can't say I have, I've already lost credibility on the deal. So I want to touch the real estate. I want to drive it. I want to get a 53 footer, and I'm certainly not driving it. I wish I could, but I want to get a 53 footer and see if it can turn into the site, because that's what a lender's probably thinking. Can a tenant with big box trucks, 53 footers? I need to think about what the challenges could be on that site so that when we bring it to market for a loan, we already have that answer pretty quickly.
Yeah, I think that that's absolutely key. I was talking with a big institutional investor the other day, and they're more on the logistics side. So they'll be going and looking at a 1 million square foot warehouse, but he does the exact same thing. He's always on a plane, and
Yeah.
he's just surveying the site. And the one interesting thing that he said, which I found very fascinating, is that he actually spends a few days there because he wants to see the site at different times of the day. He said if you
Yep.
just go at 3 o'clock in the afternoon, you probably won't see any choke points or bottlenecks in the property. But if you go at 8 in the morning, that's when you actually start seeing how the site will flow and if there's any big issues. So I
Yeah,
think
think
having
about
that
driving like
ex
95, like going south in Jersey. Like you go at 8 a.m., you could be sitting in traffic for quite some time. And you go at 1 o'clock, you're probably still sitting in traffic, but at least you can see the differences and at least how the trucks are tearing up the road at certain times. It's super important.
Yeah, that's that having eyes on the property, I think, is one of the best things an investor can do, and that extends to everybody in the value chain of debt and brokerages and the lender, all of that. I think having somebody with good eyes on the property is very important. One question that I have with land sites. So let's just pick like a 10-acre site in a key market. So San Diego, you mentioned. So the challenge that I'm guessing that runs up to all the time is that a 10-acre site in a key market and key land is the highest and best use for industrial outdoor storage when there could actually be a development that goes up there, whether it is a large logistics center or a large industrial development, as opposed to it being a low site coverage use like a laydown yard or truck storage. Is that a challenge that comes up? Is that that isn't just the best use for that site, so it's almost underutilized and perhaps not maximized or optimized to its best use?
Yeah, that's an awesome question because again, like we talk about the challenges that we have to face with lenders and in this institutionalization of iOS, and we're in that period now where lenders understand iOS, so we don't have to explain it to them. But one thing that lenders do ask is this the highest and best use? We have a piece of land that's sitting in San Diego. We'll use that for an example. Is that the highest and best use? And sometimes if the zoning is there and quite frankly, you have it embedded in the zoning that you can, let's say, stack containers like we talked about in Savannah. Like if you have zoning that you can stack containers, you're going to get way more tenancy by the port that wants yours, whereas maybe the property across the street doesn't have that as part of their zoning. So the highest and best use for that is certainly going to be iOS, stack containers high, 3 containers, whatever it may be. So lenders have definitely been asking the question, is this the highest and best use? And I think in certain markets, uh, certainly it is. And then maybe it's a multifamily development in 10 years time. Maybe there's growth. Like you look at Nashville, like my brother's been down there coming up on 20 years. And in 2010, we would go visit him. He'd say, here's the Gulch. This is the next pocket that's going to explode. And then a few years later, here's Wedgwood, Houston. This is about to explode next. And so like the cities in this industrial market of Nashville, for example, are exploding with multifamily. Whereas right now it could be a great iOS site, but in 10 years from now, look at, call it East Nashville or Germantown. Those have become really hot multifamily markets. So we talk about like sitting on gold. It certainly could be that in a couple of years where the highest and best use right now, let's go park trucks for United Rentals and sign them for a 10-year lease with CPI bumps and certainly, attractive terms for the financing market, but it could become a great multifamily market in a few years. And now you're sitting on another added layer of a business plan you didn't even think of.
Yeah, having multiple exit strategies, I think, is a great option. Do you find that a lot of buyers or investors in iOS are looking at it as a covered land play, where they're saying this is what we hope our exit will look like, or are they doing it saying we're going to hold this indefinitely as iOS?
Yeah, I think the business plan day one is we're holding this long term. iOS is our play, especially when you buy a site. And again, we'll talk Jersey. I know I bring that up often, but if it's zoned properly and you can have iOS there and do truck parking, it's so hard to find. So that is the highest and best use for that site right now. And so I think having that, and especially when you're in Newark and you're getting these 25 to 30,000 per acre per month tenants, and then you kind of scale it back into those secondary markets of Jersey getting, call it 15 to 20,000 per acre per month. I mean, these are high numbers that work really well for underwriting. And so I think to answer your point, it is definitely iOS first. And then in the back of the mind, I think as lenders start to ask the question, what is the highest and best use? And can you convert this to office or multifamily or whatever it may be in a few years? It's starting to kind of pique the investors' interest a little bit. And maybe it isn't iOS in a few years and maybe it's something else. So I think it's starting to come up for sure. But at least for our clients, like day one, this works iOS. We have the comps. This comps out nicely, and there's tenants in the market that need that space. And again, like I always talk about this on the panels I've moderated, mission critical is like my favorite word when it comes to iOS. These tenants need these sites, and in the early days in 2020, that's I guess the early days for me. Everyone on the lending side was all right. We need Herc Rentals, we need U-Haul, we need Amazon. But now you've kind of skinned it back a little bit, and you have these companies like a timber company that might be backed by $1 billion private equity firm, or maybe even a gutter company that services all of New Jersey or Florida. These are companies that really are like the backbone of these markets and are backed by major private equity firms that it doesn't always have to be a high credit Amazon type lease. I mean, if you have a gutter company, for example, that services all of New Jersey, we'll just call it, or at least the few markets of New Jersey, they're not going anywhere, and they need to be there. And so lenders have gotten super comfortable with the tenancy as well. I think it's just very important to make sure you're buying in a location that there's a tenant demand. You can't just buy something and say, all right, this is iOS, we're going to park trucks there. That's perfect. You need to make sure there's a tenant demand there, and that's incredibly important for our clients.
Yeah, that leads into the next question I had for you was I think people understand that if there's only one option available and it's in a busy market, then they have no choice. But with your more inland, let's say Kentucky is an example, if maybe it's not in Kentucky, but maybe it's in a suburb of Kentucky and somebody has a great site, because there's not a lot of capex that goes into these properties. Like it's maybe paving, maybe it's only asphalt, or maybe it's gravel, fenced, some lighting. Like there's not a whole lot that goes into it. What's stopping somebody across the street from saying, well, I can do this and I can accept a lower margin by charging less rent and then I can poach the tenant? Is that become a risk from a financing standpoint when you start getting into the non-mission critical markets?
Yeah, I'd say like you have to be really careful. Again, zoning is super important where it could be, M2 on one side of the street and then, it could be multifamily across the street. So I think you have to be super careful as an investor what you're buying. And there might be a site that you love in Kentucky that you've seen, you're driving the highway every single day to work and you see that there's trucks actually parked on that site, but you don't know how connected that owner might be to the obviously to the city, and they might have a zoning restriction, or they might have a something that allows them to park trucks that you as the next buyer might not be able to have or have that same relationship. And there might be that YIMBYism that you're in my backyard now, we don't want this anymore, and it's rezoned multifamily. So I would say like for new investors and certainly our clients at this point, like talking to zoning council, making sure you know that you can actually do what you want here and it's been that way forever. Make sure you're super smart about zoning. I mean, it's environmental. You can get figured out. There's insurance that you can certainly do. If there's RECs, then you can certainly hold back money from the lending standpoint until there's no further action. Every site seems to be dirty in some capacity, and people have been comfortable with that for decades in regular industrial. So zoning is super, super important.
Yeah, I couldn't agree more with that. And so on the tenant side, if we could just jump into that a little bit more,
Yeah,
because you mentioned some of the larger ones that just have use for industrial outdoor storage. There's also a subcategory of that of perhaps like truck parking. So
yeah,
someone wants to just park a 53-foot trailer there, and maybe they just want to rent a stall. And now you start getting away from it being like one tenant. U-Haul renting the entire 20 acres to now perhaps you got a 2 acre site and you're renting individual stalls
yeah.
to truck owners. And that becomes more of an operating business because now you have to be dealing with individual tenants and any concerns that they have if they're encroaching on their neighbor's space, and you probably have shorter term tenancies. Is there a tenant profile that you look for specifically? As obviously an Amazon looking to just store a bunch of their trailers is going to be the best type of tenant credit, but then you're going to have all these small ones where someone's almost trying to make it a self-storage type of equation, where they're doing month-to-month leases with individual people. Where on that spectrum does it start becoming unobtainable to even get financing, or more challenging to get financing, I suppose?
Yeah, this is almost like piggybacking the question in the beginning, what is iOS? And we say it's low lot coverage, it's ISF, it's service facilities, or even just truck parking. But to your point, like managed truck parking has become really popular, and we have some friends and clients in the space doing that. And so pitching that to a lender is so different than like, hey, here's a Amazon leased, 3 acre site with 10,000 square feet. You're basically, like you said, it's an operating business at that point. It's almost like a hotel when you're pitching it to lenders, and they're going to look at it much more conservatively than just call it a United Rentals deal in Maryland. Obviously, you have a 5 year or 10 year fixed lease with United Rentals, and now that you have managed truck parking, it could be cyclical. It could be a station in Charleston, for example, where if there's rain certain nights, maybe the truckers just want to keep going, and you've missed out on that income. It's almost like a hotel at that point. You've missed out on that income, from that night. Weather certainly plays into that as well. So that's something that is becoming super popular in managed truck parking. The financing is just, it looks a lot different, from the life cos and savings banks and pension funds, even the debt funds. Whereas it's a little easier to get something like a traditional iOS site financed today. And to your point, it's super operational intensive for these managed truck parking properties, and we've financed them certainly. It just looks a little different than doing a traditional iOS deal.
Yeah, I know that the numbers are always going to be variable, and it's property specific and it's investor specific and it's time specific. But even just high level, or if you could give me a wide range, what would it look like for financing on, call it a 3 acre site with Amazon as the tenant? And then what would financing perhaps, how much different would it look for someone that's doing managed truck parking in a smaller area?
Yeah, so we've done a tremendous amount of deals in call it the minimum $1 million range to as high as a couple hundred million. And so on that side where let's just say you have a United Rentals deal, we closed one in Elkridge, Maryland a few weeks back where, to your point, couple of acres, small facility, and United Rentals is there for 10 years. At the time, we fixed that at 6.125%. Today, that's probably 6.5%, just where treasuries have gone since then. That was with a traditional local bank. So you're looking at stabilized financing right now, and we can. I'll probably go on a tangent here as well with where financing is, but it's gotten so tight right now, where we're doing financing in the high 100s over the treasury for these portfolio loans. I'd say that's probably in like the 25 to $200 million range where you can get that, call it high ones, low twos over the treasury from the life cos, pension funds, banks. And so you look at these larger deals that are more traditional IOS, you're getting a really competitive spread over the treasury. It's almost getting as close to where industrial is. I'd say we're probably a few months to maybe a year to get to that point, as more deals go and get done. And we're closing about a $70 million portfolio loan in the next week or so that is in that high 100s over. If we had this conversation a year ago, it's probably in like the mid 200s. So it's getting much tighter. With respect to the managed truck parking, again, and I will say one more thing just on the portfolio loans and the individual loans, those are getting underwritten, and for the folks out there listening, getting underwritten at, call it like a 10 debt yield, 125 debt service coverage, so like traditional type, life co, pension fund, bank financing. When it comes to the managed truck parking, that's when it starts to get into this like higher debt yield, call it 12 to 13%, so a little more conservative. Rates where today are going off in the low to mid sixes for stabilized product for iOS and traditional iOS. I think it's more, and call it like the high sixes, low sevens for managed truck parking. So it's almost like a 50 basis point premium for that, and less proceeds just on the debt yield basis as well. Because it is becoming cyclical, and it almost looks like a hotel operation at that point.
Very interesting. What are your thoughts on the 10-year? Where do you see that going this year? I know nobody has a crystal ball, but what's your sticking a wet finger in the air? Where do you think it's
Yeah,
going?
these are my favorite. These are my favorite questions. Like on the panels, I always ask what inning we're in. So that's been my favorite my whole career. So yeah, I love these questions because like I have no idea. It's so hard to tell. We rate locked a deal for an iOS portfolio a few weeks 3 weeks ago at 6.29%. A week later, it would have been 6.24, and then 2 weeks later, it was 6.40. So
Oh,
it's so hard to time these things, and especially, I think in the environment we're living in, and I think it's so hard to tell. But spreads have compressed quite a bit. I think that's like the big ticket item right now is that you have these spreads in the high ones to low twos over the treasury. So you look at the treasury from, call it a few months ago to a year, like it's generally around the same. I mean, it's hit as low as 4 at one point. It's obviously years ago up to 5. And so I think if you have these spreads that keep going into the, call it high ones, even into the mid ones, I think it'll get to that point in a year from now into more traditional industrial. I think it's just all about where you're comfortable financing right now, where you are cash on cash, and it's just hard to answer where the 10-year will be. But I think it's going to generally stay around the same. If I had to guess, maybe 20 basis point swings in either direction. That's been kind of the trend we've seen.
yeah, a great answer. And I'm the same. 20 years I've been in this industry. The only thing that I've learned is that I have no idea what's going to happen tomorrow, let alone
Yeah.
in this year. I have absolutely no idea. But it's always fun to guess. I
Oh
mean,
yeah.
I think everybody's trying to look at the tea leaves and say, well, if this happens and this happens, and it's always great getting different perspectives. So thanks for sharing that.
Yeah, of course. And like, and as the deals obviously like as they get bigger, obviously every basis point counts. So like maybe it's negotiating with the lender, hey, give us a few extra basis points. We think treasuries are going to go up, and then negotiating with lenders. Maybe there's no treasury floor for a few weeks while you're negotiating the term sheet. Just trying to get creative with the lender, and everyone wants to pay as low of an interest rate as possible, of course. And to your point, like you've been in the business quite some time, and I love talking to my grandfather about like, tell me about the '60s, tell me about the '70s. Like what were these like, you talk about rates in the '70s, people were paying 18%. Obviously, deals have skyrocketed since then, so it wasn't such a big swing if it went from 18 to 16 or whatever it may be. But it's just fun. Like the one thing he says, he's like, nah, no one knows. You have no idea. Just kind of ride the wave. And as long as people are lending, you just have to make the numbers work. It's that simple.
Yeah, the wisdom that would come from having an 88-year-old that you can ask those questions to would be very, very profound. So, yeah, maybe one of these times we're gonna have to get your grandpa on too, and have him share some wisdom because I'd love to ask him some questions about that. Uh,
Yeah, that would be a blast.
well, let's talk about that sometime because I
Yeah.
think that'd be pretty cool. I want to get into the risks because I think
Yep.
that that's one of the things that's most underappreciated about not even just iOS, industrial as a whole. I think too many people focus on the pro forma, and if you pull this string and you manipulate this number and you adjust your exit, all of a sudden you can make a pro forma look pretty sexy. But there's not enough attention that goes on to the downside risk. And from my perspective, correct me if I'm wrong, this is your arena to shine some light on it, but I think environmental, which you already alluded to, is probably the biggest one. So I'm
Yep.
guessing it's pretty common practice to have a either a phase one or perhaps a phase two going into it. How do you mitigate the risk? And I think it's fairly straightforward if you had Amazon renting it. How do you mitigate the risk if you've got 50 individual trucks that are pulling in there and there might only be renting the space for a day or for a month? How can you possibly keep track of who might be someone that contaminates the property? And again, I'm guessing this is just on a spectrum that is case by case, but how do you mitigate your environmental risk on these sites?
Yeah, I think again, this is why you're the king of this. These questions are awesome, and these conversations are fun. So, yeah, a lot of our clients immediately off the bat, environmental insurance, day one, make sure that's ironclad, because you just never know what can come up. For example, PFAS has become incredibly important in the iOS space, and I think in industrial in general, where it was a solvent from the 40s that basically for pipe laydown yards, for example, or for pipes in general. It was a solvent that basically just kept it so that water wouldn't seep from the ground or seep from the pipes, and so I think like you look at PFAS, it's starting to come up now, and there were some laws that were passed, in the summertime that now we have to look for PFAS, and so I think like it's very hard to you just never know what you're going to get. So a phase one is super important. Every lender, every client, everybody in the space needs a phase one. That's off the bat. If there's some recs where you need a phase two, every lender is going to want that. I think certainly every buyer is going to want that as well. And there's certainly sites that, again, like there's clients of ours that certainly have PFAS on their sites, and it exists, but right now there's really no like remediation for it. And so the lenders that we've been doing deals with, as long as there's some sort of path to cleaning the site, as long as you can block it off or do some sort of testing, doesn't need to be invasive. But while you're in occupancy, like to your point, you just never know who's going to bring in that contaminant. You certainly hope they don't. So you have to be really careful. And so our clients are super, super keen on getting environmental insurance. That's right off the bat. But again, there's sites where clients will buy that have a phase two. Lenders get super comfortable with it, maybe hold some money back until there's a no further action, or at least some plan in place. We're not just going to keep it dirty forever. Certainly need to, because you think about the next buyer, what institutional buyer wants to buy a really dirty site where there's no work done? No one's going to buy it. So you have to be really careful.
Yeah, great answer. Matthew has a question, which I'll get to in a second here, Matthew, because it's a great question. Just to follow up on the environmental insurance, what have you seen pricing wise for that? Just if someone was thinking, okay, well, I can protect that downside risk by insuring it. What does that look like? What does coverage usually look like? Have you dug into what those insurance policies actually look like on what they'll remediate or what they'll put money towards if there is an issue? Have you, I guess, dove into any of those policies in more detail?
Yeah, I'd really like to get into the nitty gritty with these deals just because we have to pitch it to the lenders and make sure they're comfortable with it. If a lender just says, "Hey, this is a dirty site, it's not for us," well, I need to be able to say, "Hey, like actually look, peel it back a little bit. There is a remediation plan in place. There's only one rec where the no further action's coming in 6 months. Let's just hold back a few dollars, where you can see where that where the payment is going towards, and as long as you show where it's going, we can get lenders pretty comfortable with that to an extent, of course. So I would say it just depends on the market. Obviously, Florida has skyrocketed with insurance. I think certainly the West Coast with the unfortunate fires over there, and so I think it's very dependent on the location for sure. Of course, if it's too expensive, it might kill the returns, and so you decide not to buy the property. But and this is not, and certainly we've got plenty of institutional clients that buy sites where there's a phase two needed, and there's a path to clean that. As long as the numbers work and it makes sense, it's certainly financeable and it's certainly doable. So yeah, I would say like it's the environmental insurance is super important.
Have you seen any rough pricing? I can appreciate how it varies across different markets, but just even as a ballpark on what someone would be looking at for a yearly premium on insurance.
Yeah, that's something I need to get back to you on. So I'll follow up in the chat section when it comes live. But I'll get back to you on that.
Yeah, yeah, please do. I'd be curious to know what those costs are because whether somebody's paying that premium or whether they're self-insuring it, that is something very important. And another key thing that I really appreciate that you brought up is that if there's more to the story, if you can actually peel back that onion, if there is an environmental issue or there's a wreck that's in there, if you can tell the story on why it's there and what the plan is and how this is going to be addressed, that could be the difference between getting a property financed and not financed. And it wasn't
Absolutely.
that long ago where like if a property had a phase two that had a wreck in it, that banking or even the lending community at large would just say no, we're not interested in it. But I've heard a lot more in the last number of years on even industrial properties, notwithstanding iOS, but just broader, that they'll say, okay, yeah, no, if there's a plan in place, to your point, we'll either do a holdback or we have to have some sort of plan and mitigation strategy on it. But it's no longer just black and white of saying
Yep.
it has contamination on it, we're not financing it. There are areas to do that. And I think that speaks to the value of having a broker like yourself in there, because a lot of people wouldn't even think about pushing that and making it a point to go forward. So that's an endorsement for you and the brokerage community at large is just saying that having a value of someone like you in that position is imperative in my mind.
Yeah, like when we're engaged, and appreciate you saying that, because like when we're engaged on a project, like we're not just there to clip a fee and move on to the next deal. Like I take these things like super personally, and like these clients of mine are like friends and obviously clients, of course, but like I want to feel like part of the team. And so like I'm sitting in their office. I want to know the nitty-gritty of the deal. Like I have to sell it just as much as like I have to take the weight off of their plate. The clients are really good at finding sites, buying them, putting them under contract, and then I have to go and get the financing. So I have to feel like I'm part of the team. Like I want to be on the team. I have more paraphernalia, vests and hats and I love wearing them on the weekends and showing off, my clients here in New York. So I want to feel like I'm part of the team. And so in order to do that, like I need to be able to sell it just as much as the CEO who, doesn't want to deal with that. It's not that they don't want to deal with it. They have so many other things to deal with than an environmental, issue on a $70 million loan. Like I want to be there. I want to be that person to take that weight off. And as long as, us in the brokerage community, like we can, obviously be honest with the lenders, tell them what's going on upfront, nothing to hide. The lenders love that and they appreciate that, obviously.
Yeah, that's the value of a good broker, and I can see why you guys are as good at you are, and why you've had such a good history by doing that type of service. That level of service is key. I want to get to the question from Matt Graves. Hey, Justin, SVN Nashville here. How do you determine an asking rate on an iOS site when there are no direct comparables available?
Awesome. Hey, Matt, good to meet you and thanks for hopping on. So, yeah, I would say like you have to be, I would say on the lending side, for example, there is really no like massive database. Like Matt Hunsucker's a super close friend and like iOS List has done an awesome
Mhm.
job with that. So that certainly is available. The appraisal community has been terrific over the past few years, and especially for the lending side with getting comps and certainly our clients as well have some incredible relationships and comps that they're able to bring in. Someone made a joke to me the other day that I probably have so many comps I should just sell them the co-star, but I don't think my clients will be too happy if I did that. Everything's very proprietary, of course. So I would say, like Matt, like super important to get into the weeds with the brokers that are in the market. Certainly the tenants that are in the market as well, like understanding what they're paying. Let's say if it's not within 5 mile radius, make sure it's 10 or 15, from the property. Like make sure that the comps aren't just like you have one deal that's in, called Charlotte, like a deal that's in Nashville, for example. That's not going to help. So make sure it's within that market, make sure it's there, and you can easily point to it for whether it's the lender or to your client that you're trying to help out get the best deal. I would just say it's like super important. Just make sure you talk to all the local brokers in their respective markets. Like David Gwynn, for example, like really close friend out of Dallas. Like he's an awesome broker, relationship, but also a really good friend. And so like he's super ingrained down there. And so like the people that are local to those markets, they're going to be willing to help because you're certainly going to help them in some capacity. That's why I love the iOS space too. I think everyone's like super energetic and willing to help to an extent, of course. And I think like that's what we've talked about on our Biz Now panels is like for new entrants, my biggest thing was just ask questions. Like people are willing to help. They want to help out. They certainly don't want to compete, of course, and try to buy the same property as yours. But this space is just institutionalizing so fast, and I think people are willing to share and help out.
Do you think that institutionalization is going to squeeze out the traditional mom and pop operators in this space?
It's interesting. 'Cause I was talking to someone about that the other day, and we just closed the big loan for the Altera folks last Friday with Blackstone for 189 million, and it was Blackstone's first foray into the debt market for iOS, and so that's a huge thing for all the investors and people that are buying iOS, and you look at Peakstone, of course, like the REIT that just bought a big portfolio a few months ago, and so everyone many years ago and the lending community, for example, saying, what's our takeout? What's this going to be? And there was always going to be a REIT at some point that came in, and of course, Peakstone did that. Blackstone was always going to get into the space, and we were fortunate to be the broker on that, to get them in, and they're super close friends as well. So I would say like the institutionalization is super helpful. There's going to be plenty of people raising capital to go buy these properties from the mom and pop still. And I think the mom and pop operators, like I know we use that term backbone, like some of those folks are and these companies, they're sixth or seventh generation family owned trucking companies. And I think if the family's not looking to sell, they're not going to sell. It's no different than like a old school New York family. They may not want to sell their office building that their grandfather built or whatever that might be. So I think it's super dependent on the tenant, what their goals are, what the family's goals are. If they might be that plumbing company and they service all of New Jersey and the family's been in it forever and that's what they've been trained to do. Obviously, when you see some sites selling for a couple $1 million an acre, you get excited at that number, but then you have to think about where to put that money with a 1031 or obviously pay the tax and move on. So I think it's a great thing that the space is institutionalizing because it was always going to happen, it felt like, and now we're seeing the trends with, again, a Blackstone or Peakstone or whoever that might be who's next. I think it just helps the market tremendously, where it's not just a flash in the pan. It's not just a subset of industrial anymore. And I bring this up a lot too, that we don't put presentations together anymore that have a slide that says, what is iOS? It's just, here's the company buying this property. Here's the portfolio we're refinancing. Here's the wall, here's the debt yield, and that's what the lenders are excited about. They understand iOS at this point.
Yeah, that's encouraging because I'm sure that it was a roadblock in the early days trying to convince people what iOS was in the beginning. And to your point on the mom and pops, I think that term is even a bit of a misnomer because that might conjure up an image of a mom and pop working in a convenience store when in
Yeah.
all reality it could also refer to that family that has $100 million worth of assets all across the country because they've built a generation wide trucking company. So that is the full gamut too on that.
Yeah.
For those
And
that
that's real quick. Sorry to
sorry, yeah,
interrupt
go
you,
ahead.
Chad. Like that's been really fun about this space as well, is that I've been fortunate to get these calls from, one buddy of mine out of Dallas who's like, hey, my father's been buying iOS for the past 20 years. No one knew what it was. And We've just been buying this because it serviced our family's company, and now we're looking to finance that and capitalize that. I'm like, that is so cool, right? It's like you're buying something you never thought of would be in vogue, and now obviously sitting on gold like we talk about, and it's not like let's go buy, let's go take money out and go buy the Ferrari or the boat. It's like let's go reinvest that money into the business and let's go compete, that mom and pop, go compete with the Amazons of the world and things like that. So yeah, I didn't mean to interrupt you, but I wanted to make sure that that point, like it's not just a mom and pop like selling, groceries. It's these are real businesses.
Yeah, no, I'm glad that you did bring that up because that is a good point. And it kind of leads into the next question that I had for you is how does an average investor get into the space if they don't have that multi-generation background of being involved in it already, but someone's just saying, you know what, I like this iOS. I like the fact that you don't have a ton of management because you're not looking after a large building. You've got tenants in there that are largely going to be taking care of it themselves. And then the great part is that there is a future exit. So if you are
Yep.
buying it in a great area and development's heading that way, you could say, I'm going to hold this for 10 years and then my exit is to sell it to a end user developer. How can someone compete in this space right now when they're going up against these large institutional funds? Is there still a market for that average guy to just say, yes, I like iOS, I want to get into this? Where's the market for them?
I'd say it's still all about scale. So, deals, people are buying deals as small as a couple hundred grand to obviously in the couple $1 million range, of course. So I think like if you're a new entrant to the space, it's figuring out what is that location that maybe the bigger shop isn't looking in, or maybe it is maybe it's a friend that his father's looking to sell his site and you have the in that way. I think it's certainly hard for new entrants to find product today, of course, because there's so many established firms that have raised tons of money and institutional capital. So it's hard to, of course, to compete. But I think if you can, maybe Savannah might not work because there's so many big players there, but maybe somewhere like, a Greensboro, which is also super hot, or Laredo was that a few years ago. Now that's on fire. So I think it's maybe looking for that market, and like Mobile, Alabama is starting to become another market that people are looking in. So I think it's many years ago, everyone said this is port cities only. That's where we're buying. Now all of a sudden we're doing deals that are 30, 40 miles away from Atlanta. That it's pitched as Atlanta, but well, once the lender looks at it, they say, well, this isn't exactly close to Atlanta, but the dynamics are there and it's close to the highway and it services all of the Southeast. So I would say like look in the places that no stone uncovered, I guess. Like look in the places that others might not be. Find out the dynamics. Obviously, if you think I'm going to a tertiary market, Amazon's going to go there. I don't think that's the right mindset. I think maybe I think about like New York City office, and you think about these glass towers, and that's what's cool. That's where you want to be. And I cut my teeth in New York City office and out of college in 2013. So that's like all you think about is these nice trophy assets that are glass. And you can kind of think about that as iOS. That's an Amazon site in Newark, New Jersey. But if you look back at 2013 New York City office, the hottest market was Midtown South. There's the TAMI tenancy, it was technology, advertising, and the rest. And so you look at, that was the hottest market. There was 6% vacancy at the time, hottest market in the country. The buildings that were popular were 100,000 to 300,000 square foot office buildings, mid block, two sides of light, two elevators that service 10 floors. That was awesome. And so maybe the new investor that comes into the space says, you know what, Mobile, Alabama, I might not get Amazon. That's okay because there's going to be a tenant that needs space in Mobile that is a mom and pop that has a couple hundred million behind them, whatever it might be. I don't know this to be the case, of course, but if you do the research and you like, don't get caught up in that. I need to buy in Newark. I need to buy at port cities. Nothing wrong with that. That's incredible, and some of the best deals we've done have been financed there. But I would say there's nothing wrong with looking somewhere else. Like that's okay. Like don't think about going to the cocktail party and saying, "Well, I just bought this great site in Savannah." Well, look at the site that you could have bought in Mobile, where maybe the tenant pays 2,000 per acre per month, and he just signed a 15-year ironclad lease with 3% bumps. That might not be the coolest story to tell, but probably better economics there than looking elsewhere. So that's kind of my thought. It's don't get wrapped up in like the big port city markets. Look where the dynamics are.
That's really good advice. And if somebody does end up buying a site like that, tell me because I'll be very impressed. It'll be a trophy asset in my mind. So yeah,
Yeah.
feel free to tell me if you end up doing one like that. One more thing I want to get your thoughts on is the difference between smart money and dumb money. So I would say institutional money is going to be smart. They've got very sophisticated people doing internal underwriting, then they've got professionals like yourself, and they've got layers of protection to keep themselves from making bad decisions. Although it still happens, I'm sure, but there's a lot of layers that it has to get through, and usually things have to go wrong beyond their control. But the new investor, I think the one thing that they're all afraid of is being that dumb money. Nobody wants to be the dumb money. But if you don't have those layers of protection that an institutional fund would have, then the likelihood of making a mistake is amplified just by the nature that you don't have those layers of protection. What in your mind are the things that should be on an investor's radar when looking at an iOS site that should say, okay, well, look at these things so that you can avoid being that dumb money. You can avoid making those mistakes. We talked about environmental being a big one. Anything else jump to mind on what an investor can do to avoid being dumb money?
Yeah, I think it's an awesome question again. Like I think you look at these sites and say, Lodi, New Jersey, for example, like amazing, awesome northern New Jersey market and right off of call it, Route 17, it's pretty hard to get off that highway, or off that route into a property. So you have to make sure, like you think to yourself, oh, this is perfect for 53 footers. Of course it is. It's Lodi, it's New Jersey, it's close to the port, close to New York City. But you have to think about these things a little bit and like can a truck actually pull off to the highway, aggressively or slam on the brake to take that turn and then there's an issue. I just say like drive the market, like we talked about it earlier, like go touch the real estate, go drive the market, see what's driving that industry or what's driving that space. I think it's just really important to make sure like you don't just see a site and be like, all right, United Rentals is going there, perfect. Or obviously H&E was going to be bought and now acquired by Herc. Like you just want to be careful about like what you're buying, who's the tenancy, make sure that that you can get financials from that tenant too if you can. That's super important. Something to think about, and uh, I think those are all just important things. Like don't want to be the dumb money, of course, but just look at zoning, look at environmental, make sure the tenant, if you're doing a sale leaseback, maybe give them some time to unwind their business while you go lease the property, maybe give them a few months to a year. Obviously, that's great for going in cash flow for some lenders, whether it's a debt fund or bank. Um, so that's kind of my thought on that.
Yeah, I completely agree with everything you said there. And just as a reinforcement on the element you talked about earlier was just the team. So I think that is the best advice that I would give to somebody is surround yourself with a great team because
Yeah.
you'll always have blind spots. I've bought properties and I've had blind spots, and I think if I would have had more people looking at it and saying, "Well, did you consider this?" or "What about this element?" then you're alleviating at least the potential for making a mistake. So having a team, like in my mind, I wouldn't even consider looking at an iOS site or getting funding without talking to you first. Like I could see that just the passion, enthusiasm, and expertise you have in that area. To me, and I'm guessing everybody listening would be the same way. It'd be very easy to be talking to you about getting debt on it and also just your thoughts on it. But I'd have a local broker or somebody at least that specializes in iOS to help source deals and look at opportunities. And then I think a lawyer could be a great addition on
Yeah.
there as well. Ron Rohde, he's a lawyer and an investor in iOS based out of Dallas. He invests in it and he's a lawyer. So to have him as a guy Like that to me, if I was setting up a team, it'd be you, it'd be Ron, and it'd be a broker that specializes in iOS because I think just between the three of you guys, you'd be able to identify a lot of issues that I might omit. Who else would you add? Is that like the dream team? Is that the power team there?
I like that. One of my early BizNow panels, I talked about the panelists being like Marvel Avengers, and I was surrounded by guys like from Catalyst who are super close, awesome friends of mine, and got me into the space originally, and then Altera and Real Term, and I said everybody, this is like having Thor, Iron Man, and Captain America, and I was Ant-Man, so that got a good couple of virtual laughs, but. Yeah, that's very nice of you to say. Like I would love to have an attorney on the team for sure. Legal zoning counsel. I want environmental on my team. I want some really, aggressive, people that not aggressive, but like people that are like really passionate about this space. I want people like I just hired someone for my team named Ben who's super passionate about the space and like loves it and touches it and wants to learn and travel and be on these site visits and I think you have to have a passion for this. I mean, these are deals that are, on average, $6 to $7 million and as small as $1 million. Of course, portfolio loans get much bigger, but on average, they're in that kind of single, seven-figure range. So these are smaller deals that like you need to be passionate about and have to drive the site and like understand it. And I think about like creative ways of like how to pitch a deal to the lending community and like maybe it's commissioning someone to drive that 53 footer. That's a goal of mine this year. I want to get my trucker's license, but
Hmm.
if anyone out there, let me borrow your truck for a little bit. It'd be great. I think like just having some really passionate people on the team and people you can bounce ideas off of and don't be afraid to ask dumb questions. Like that's my one thing. I want to hear every question. One of my first jobs, my boss said, do you understand what's going on? And I'm like, yeah, of course, of course. And he's like, all right, explain it to me. I was like, all right, I can't explain it. And he said, if you do that again, I'm firing you. And like since then, it's like resonated with me. Like if you don't ask, you're not gonna know. So be passionate about what you're doing. I'm going off topic a little bit, but attorneys for sure. I want some people to have my back in that regard, and then just some really passionate people.
Yeah, the passion is key in my mind because otherwise you just become a number and people are just you feel it. You feel like you're just getting processed as opposed to somebody involved in the transaction. So
And
your
and
passion.
I want people that know what like the best barbecue is when we go to these sites. So like for example, Savannah, there's a place called Babes that's really good and it's off the side of the highway. Like truckers love it and like I want to know like what the best barbecue is. So that's fun too because when you pitch it to a lender, like hey, let's go view the site. We can go pick up barbecue on the way. Like that's fun. That's like a fun thing to and something you can it doesn't need to be like buttoned up conversations with these lenders. Like they're just as passionate because they want to put money out the door. They want to do it in a smart way, of course. So you have to pitch it that way. It's just, yeah, the passion is really fun.
It is. I completely agree with you on that. You mentioned iOS list as a good resource. What else would you recommend somebody look into if they just wanted to follow along with this industry more or find more research or more resources
Yeah.
on it?
Matt had, again, who's a really close friend. Like he's done an awesome job at iOS List, like daily emails about, deals that are either for sale or for lease or even just news about what's going on. Like we had that closing last week and that was on that. And deals that close daily are on this email chain. And he does some funny memes on the weekend. So
He
that's always
does.
fun.
He's awesome.
So
He's done a great thing with that.
it's awesome and he's all in and passionate too. So like he's been a great asset. Yard Dogs is becoming a new one that's awesome and they've done like a fun twist and put a little dash down with some guys that did some deals on LinkedIn. So that's been a good resource. BizNow is doing a really awesome job too. Like they're I've been working really closely with their team to kind of ramp up iOS this year. Like there's a few in-person events that I'll be moderating and virtual ones too. And so like they're starting to put out some articles on it and Commercial Observer too, like super close friends of mine. We've done some cool articles with them and so like they're starting to pick up on the iOS press. Um, And I think CoStar also like they're starting to pick up, like 5 years ago, we would pitch deals and lenders would be like, nah, you go on CoStar, it doesn't comp well with Class D industrial. And I'm like, oh boy, we're in trouble here. So you really have to be careful. But now they're starting to pick up on it, of course, and they just put out a cool article about Amcor buying a pretty big site uh, in the UK. So long story short, I think iOS List does like an incredible job. Follow them; they're great.
Yeah, that'd be my first recommendation as well, because I've been on that since I think Matthew started putting that out, and it's great content. So yeah,
Yeah.
I'd encourage people to check that out. Uh, Wrapping up, one question: anything that I missed? Any questions that I should have asked you that I didn't, or anything that's something you need to get out regarding iOS?
No, I feel like we touched it all. I mean, we went from the mom and pops all the way to the institutional side. This has been a blast, talking about something I'm super passionate about. No, I thought this was awesome.
Well, your passion shows, so it's I can sense it. I'm sure other people can as well. So I'd encourage people to connect with you. I'll put your LinkedIn bio in the show notes as well as Cooper Horowitz's website. Is that two best ways if people want to get in touch with you, LinkedIn or your website?
Yeah, I'd say like my LinkedIn and my cell is on LinkedIn, so I'm always around. But I've got twin boys that are 20 months old, so if I don't pick up right away these days, I'll call back quickly. But LinkedIn for sure is the best way to get a hold of me.
Awesome. Okay, well, I'll put those both in there and encourage people to reach out. And I look forward to continuing the conversation because I'm excited about this sub-asset class of industrial as well. And seeing your expertise and your passion on it fires me up. So really do want to thank you for taking the time to do this. And I look forward to continuing the conversation down the road too.
Absolute honor, Chad. Been a fan a long time. Like would run through a brick wall for you. Like this is awesome. So thank you so much for having me. This is really cool.
Oh, the honor was all mine. Thanks again, Justin. Really do appreciate your time.
All right, man. Take care.
Okay, thanks. And thanks everyone for tuned in as well.
Yeah.
Yeah, great conversation. I'd encourage you to reach out to Justin and yeah, we'll put all his contact information in here as well so you can reach out to him.
Thanks, everyone.
Okay, thanks everyone. Have a good
Bye.
weekend.